I'm going to teach you how people are going from a $500 credit limit all the way up to $25,000 fast. But let me say something that might hurt your feelings. Your low credit limit is not a mistake. It's not random, it's not bad luck, and it's definitely not because the bank forgot about you. It's because the bank does not trust you with power. And honestly, most people think if they stayed loyal to the bank for 5, 7, even 10 years, the bank is going to reward them with a $25,000 credit limit. And that is exactly a fairy tale. Banks don't reward loyalty, they reward fundability. And today I'm going to show you how to flip the switch and force these banks to see you as low risk, high value, and worthy of massive credit limits. 20,000, 50,000, even 6 figures. And no, you don't need an 800 credit score to do this, but you do need to understand how the game works in 2026. So let's jump in. So let's first talk about why high credit limits are a cheat code. And first, we need to kill a myth. High credit limits are not about shopping. They're about utilization. If you have a $1,000 credit limit and you spend $500, that's 50% utilization and your credit score tanks. But now take that same $500, but you have a $50,000 limit. That's 1%. Now your score looks elite. Same spending, completely different algorithm reaction. High limits are truly the cheat code to 750, 780, and 800 plus credit scores. The people with the highest scores, they don't necessarily make more money. They just have more available credit. Now, I want you to comment right below. What's your highest credit limit? Now, I want you to be honest, okay? Don't lie, don't fib, you don't have to. Let's keep it real with each other. Because if it's under 5,000, we need to fix that. And I want everyone to understand that in 2026, the banks are running on AI. So let's talk about what's changed. Banks are no longer deciding manually. Most of these applications are run through AI risk models first, not humans. And AI does not care about your loyalty. It cares about income, utilization, payment history, debt exposure, profile stability. So if you understand what the algorithm wants, you can position yourself to trigger automatic credit limit increases. So here's the 4-step blueprint, and if you skip one, it weakens everything. Let's go ahead and jump into step number 1. We need to stop underreporting your income. Most of you are lying to the bank. Let's keep it 100, okay? But you're lying in the wrong direction. When the application asks for annual income, you only put your salary. Why? Federal law allows you to include household income, and that includes spouse income, consistent child support, side hustle income, rental income, roommate contributions, business income you pay yourself from. Understand, if it contributes to your household, it counts. Now understand something else. The second you update your income in your bank system, the AI recalculates your risk profile instantly, because higher income equals lower risk. Lower risk equals higher limits. I've seen people update income inside their bank app, and within weeks, they get pre-approved for higher lines automatically. And you're not inflating, you are reporting correctly. Go into your bank accounts after this video, update that number. That alone changes the game. Yes, inside of every credit card app that you have, you can update your income, and you should be doing this at least once every 6 months. Now moving on to step number 2, the utilization flush. This is where most are going to fail, because you can't ask for more money while looking desperate. If your cards are sitting at 60, 70, or 80% utilization, the bank sees stress. And banks do not increase limits on stress profiles. Here's the power move though. Pay every revolving card down to under 2% utilization. Not 30, not 10, under 2%. And do it 3 to 5 days before your statement closing date hits. Let it report. Now your profile looks like this. Low usage, high income, strong control. To the algorithm, you look like someone who does not need credit. And banks love lending to people who don't need it. It's backwards psychology. Desperate people get capped, disciplined people get increased. Now moving on to step number 3 that I call the triple request strategy. Now we attack. Many banks allow soft pull credit limit increases, just about all of them inside the app. That means no hard inquiry, and here's what most people do. Because the system negotiates down. If you ask for $2,000 more, you might get $1,000. If you ask for $20,000 more, you might get $10,000. You have to think bigger. Now, if the online system says no, a lot of people will say call. But remember, only if it says online in the app no, then you can call. But do not, and I repeat, do not call and try to skip this process, because that will cause you to have a hard inquiry, and we don't want that. We want to use the system first and then call, because they're going to use the system you already used to underwrite it again. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using DisputeBeast, the most advanced AI credit repair software ever created that comes with a 110% money back guarantee. But specifically to Luis. Luis's credit score went up 261 points after just one round with DisputeBeast. And Jency's credit score went up 225 points after just one round with DisputeBeast. But let's not forget James. James's credit score went up 207 points after just one round with DisputeBeast. DisputeBeast link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. Now let me give you the exact script. This is just an example, okay? I'm preparing for a significant business expansion and real estate acquisitions, and I need my buying power to align with projected growth. Do you hear that? That sounds like ownership, not consumption. Underwriters respond differently when you present yourself as an investor. This is what we call a manual override, and I've seen manual overrides happen because someone positioned themselves correctly. Language shifts perception, perception shifts limits. Now, step number 4 is what I call the business credit shield. This is the real power move, because if you want massive limits without destroying your personal score, you move into business credit. On the personal side, debt affects your utilization. On the business side, different bureaus, Experian Business, Equifax Business, Dun & Bradstreet, business credit lines report there, not on your personal credit. Remember that. That means you can carry 50,000, 100,000, even more, and your personal utilization stays clean. Now, I'm not saying to commingle personal with your business. Understand that, that's not what I'm saying, but I'm telling you, you get much more flexibility. That's how investors stay liquid. They don't max personal cards, they leverage business lines. But here's the catch. You need solid personal credit to unlock serious business funding. There's no workaround with that. So if your personal credit profile has late payments, collections, charge-offs, high balances, you fix that first. There's no skipping that. There's no magic bullet. You have to fix your credit to get to that business funding. But if your credit is messy, I want you to read this carefully. I know some of you are thinking, Mike, my credit is a mess. Good, because that means there's opportunity. You don't build skyscrapers on sand, you build the foundation. So if you're serious about fundability, you get AI involved and do it the easy way. You don't have to book a free consultation. You don't have to talk to somebody on the phone that's gonna try to sell you something. All you have to do is comment the word free or go to the link in my video description, and DisputeBeast AI will do a full free credit analysis and show you what's hurting your credit and let you fix it instantly. All it takes is a few clicks and you're done. And it's backed by a 110% money back guarantee. So if it doesn't work, you get paid. Who does that? Last part's the most important. I'll tell you right now, none of these credit repair companies, that's for damn sure. Remember, this is 100% free. And no, nobody's selling your data. That's the best part about this. So you can see what's hurting your credit, take action instantly, and then get your free path to home ownership to show you exactly what you need to do. And then let the AI system do it all for you. It even mails the letters. It can't get any easier than that. So if you're tired of getting treated like a risk, get expert help with AI. You don't have to play this game alone. I promise you, it's way easier than you think. So let me challenge you. If the bank gave you $50,000 tomorrow, would you build an asset or would you buy a lifestyle? Be honest. This is where futures split, because consumers see limits as spending power. Investors see limits as leverage. And leverage builds rental properties, inventory, marketing campaigns, scaling businesses, assets multiply then. Lifestyles drain limits. So comment below, do you want asset or lifestyle? I want to see who's really serious. So let's do a rapid fire recap here. We need to update your income, flush your utilization under 2%, triple your limits request, move to business credit, fix your personal profile if needed. That's the blueprint. Banks don't reward loyalty, they reward low risk and high confidence. Position yourself correctly and you don't beg for increases, you trigger them. Now, I also want you to know that there are major changes coming on March 1st to banking all across America. Make sure to watch this video right here where I break down all of these changes to keep you informed. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.